Hello, so this is for the subject monetary policy and central banking. The topic for this one is BSP guidelines and other regulations. So we're here on the website of Bangko Sentral ng Pilipinas, bsp.gov.ph, and then we have this particular page for the regulations, guidelines, and other regulations. So to differentiate between regulations and supervision. So the regulations are the rules, the laws, the circulars, essentially the written rules and regulations. And then supervision is the implementation of the regulations. Okay, so the execution to make sure that the regulations are being complied with by the banks and financial institutions. Okay. So under the BSP regulations, we have the following: foreign exchange regulations. So if you'd like to read this one, you can do so. But we'll just have an overview. Why is it necessary for the BSP to regulate all these things? Okay, so for foreign exchange, since of course, our country is doing international trade and we have businesses that are operating on a global scale or international level, then there is a need to regulate the foreign exchange of our currency with the other currency. So daily or every trading day, the BSP determines the current foreign exchange rates, okay, to the other currencies, okay. In line with the trust of the BSP to promote a policy environment that is market-oriented and supportive of the Philippine economy's sustained expansion. The BSP, through the International Operations Department, ensures that the country's foreign exchange regulatory framework remains appropriate for the needs of a dynamic and expanding economy. Essentially, the foreign exchange rates also follow the law on supply and demand. If there is a greater demand for our currency, then it normally goes up. But if if there is less demand for it, then it normally goes down, right? So they regulate this to ensure the proper conduct of exchange. And then they have guidelines on establishing banks and of course the operations as well of the different types of banks. We've had this in the subject banking and financial institutions. Okay, so establishing banks are cater to the general public, and it involves the handling of the public's money, the people's money. So it's very important for them to be regulated to ensure that the money of the public is protected and that they would not be involved in, fraudulent activities, hiding away the money, stealing them. Okay, so there is a need for regulation to ensure the safety of the funds, okay, of the public money. And then for establishing banks, they do have certain requirements, like in the management, who are allowed to manage or head the operations of a bank to ensure that these people know what they're doing, right? And that they are experts and in a way they have good reputation in the financial industry, okay? And then of course there's a minimum capital requirement depending on the type of bank that one is going to establish, okay? And of course there are other requirements as well, okay? Implementation of Basel standards in the Philippines. So these are essentially what they call that, risk management standards, to protect the financial situation of the financial condition of the banks and financial institutions, the reserve requirements, the ratio. So we will be discussing that later on in FS analysis, okay, and then we'll be applying it in one of the banks of the Philippines, okay. So you can also check the contents of this one. Let's check the first one, okay. Have here the implementation of Basel standards in the Philippines. Implementation of Basel III. On January 15, 2013, the BSP released Circular number 781, which provides the implementing guidelines on the revised risk-based capital adequacy framework, particularly on the minimum capital and disclosure requirements. The new framework, which took effect in 2014, is applicable to all universal and commercial banks and their subsidiary banks and quasi-banks. This framework allowed a reasonable transition period for banks to comply with the new minimum requirements. International rules allow staggered implementation. The BSP adopted the capital reforms in full in recognition of the strong capital position of the banking industry. Okay, if the banks are, they have the financial capability, there's no need for the staggered implementation. If it can be implemented immediately, then I think that's what the BSP did. Okay. BSP implements new minimum capital ratios of 6% common equity tier 1, and then 7.5% tier 1 ratio, and 10% total capital adequacy ratio. So 10% the reserve requirement. A capital conservation buffer of 2.5% comprised of CET1 capital was also prescribed. In recognition of the distinct structure of foreign bank branches, which operates under the universal and commercial license, a calibrated Basel III framework was issued under Circular Number 822 dated December 13, 2014. The reform highlighted the role of permanently assigned capital, which is the CET1 equivalent for foreign banks. Shortly after, RA number 10641, amending RA 7721, was approved to further liberalize the entry of foreign banks. Okay, so this part here is imposed on foreign banks. To implement this law, the BSP issued Circular Number 858 dated November 21, 2014, providing the new capital computation for foreign bank branches. Okay, so if you notice, the BSP issues a lot of circulars. When I was still working at LBP, Quezon Accounting Center, if we have idle time, normally what we do is we read the memos and reread the circulars. Okay. In October 2014, Circular Number 856, Basel III Framework for Dealing with Domestic Systemically Important Banks, DSIBs, was issued to address systemic risk and interconnectedness by identifying banks which are deemed systemically important within the domestic banking industry. Okay. Minimum buffers is composed of CET1 capital shall be required of systemically important banks starting January 2017. So additional requirements, reportorial requirements for certain banks. Okay. Implementation of Basel II BSP Circular Number 538 dated August 4, 2006 contains the implementing guidelines on the revised risk-based capital adequacy framework for the Philippine banking system to conform with Basel II recommendation. It's actually Basel guidelines. These are normally adopted by all over the world, right? The guidelines, which took effect on July 1, 2007, provide approaches that may be used in computing the regulatory capital requirements for credit market and operational risk. So, if you've already seen the sample, the financial statement of BPI and BDO, there is a section there for risk management, and then they've addressed the different types of risk, including credit market and operational risk, as well as additional supervisory information which needs to be disclosed to the public. Okay. To address the second pillar, BSP issued Circular Number 639 on January 15, 2009, which took effect on January 1, 2011, made applicable to universal and commercial banks at consolidated level only. Okay, so the subsidiaries branches are do not need to. Okay, just the consolidated report. Circular Number 639 contains the guiding principles that banks should follow in designing their internal capital adequacy assessment process, and BSP supervision and examination personnel should consider in assessing a bank's ICAP, engaging the bank in an ICAP dialogue, and proposing prudential measures if deemed necessary. So, after the examination, they do provide, advices and steps that need to be taken to improve the situation of the banks. Okay, so it doesn't end with just examining and giving a rating. They do help, or they do guide the banks in making their situations better. Okay. On July 28, 2011, the BSP came up with supplemental guidelines on the ICAP submission of Philippine branches of foreign banks, which was embodied in Circular Number 731, dated July 28, 2011. The ICAP submissions of foreign bank branches are expected to be designed in accordance with the nature, size, complexity of their businesses in the Philippines. Okay? Implementation of Basel 1.5 standalone thrift banks, rural banks, and cooperative banks, which refer to TBs, RBs, and co-op banks, that are not subsidiaries of universal and commercial banks, are covered by a separate risk-based capital adequacy framework. So there are different issuances for them, which is a simplified version of Basel II in view of the simple operations of these covered banks. So sometimes they are not applicable in full, so they have to, in a way, customize or simplify the guidelines for smaller banks. The implementing guidelines of Basel 1.5 are contained in Circular Number 688, dated May 26, 2010, which took effect on January 1, 2012. Okay. Originating circulars of current risk-based capital adequacy frameworks, we have Basel III, Circular Number 781, if you want to read it. So they are linked here. Basel III Implementing Guidelines on Minimum Capital Requirements. Basel II, Circular Number 538, title Revised Risk-Based Capital Adequacy Framework for Universal and Commercial Banks and Subsidiary Banks and Quasi-Banks. Basel 1.5, or Circular Number 688, Revised Risk-Based Capital Adequacy Framework for Stand-Alone Thrift Banks, Rural Banks, and Co-op Banks. Basel 1, Circular Number 400, Adoption of the Risk-Based Adequacy Framework by Standalone Quasi-Banks. Circular 280, Guidelines and Adoption of the Risk-Based Capital Adequacy Framework pursuant to the GBL of 2000. Okay, so I have that. And then returning to this one, so if you want to, read over the different frameworks that they have for the Basel standards, you can go through here. Okay. And then we have compliance with PFRS or PAS, Philippine Financial Reporting Standards, and Philippine Accounting Standards. So this has something to do with how their financial statements are prepared and presented. Okay, the different treatments on the different items in the financial statements, how to recognize the revenues, expenses, how to report their net income, profit, okay, presentation of their assets, liabilities, and equity. Okay, so essentially contents of the financial statement. So again, if you've already seen the financial statements of the BPI and BDO, you would see them. Although again, later we'll have a separate video on that so that you can see as well. Okay. So if you also want, you can check out these links. Okay. And then you have the Financial Sector Assessment Program, FSAP. This I think it was conducted by IMF and the World Bank, which reviewed the Philippine financial system. The report was released November 2009, following the last FSAF mission conducted in 2002. It involves the assessment of the strengths and weaknesses of the financial sector of our country. The results are reflected in the technical notes on focused update of the Basel Core Principles for Effective Banking Supervision. So I think it was linked here. And then there's the access to finance, which are posted on the website of the World Bank. The technical note contains the assessment of the BSP's compliance with the standards. Normally, there are international standards, for sound prudential regulation and supervision of banks. Said technical note recognizes the improvements in the regulatory and supervisor framework for banks since the last FSAP mission. The technical note on access to finance speaks of the progress made by BSP in strengthening the regulatory framework for advancing microfinance and mobile financial services. Also, I think we should also check out the latest update reports or annual reports of the BSP to know what has already happened, how they how they adapted to the current situation because of the pandemic. And of course, this information kind of, very old, 2002, 2009, and it's already 2021. So we need to update. That's why I've been saying it's important for us to read the news and to look for certain updates from these institutions so we know what's happening, right? Then we have other regulations, regulation of pawn shops and money service businesses, request for monetary board opinion and domestic government borrowings. Okay. Essentially in BFI, banking and financial institutions. So we've covered the different financial institutions. We've covered pawn shops there and other non-bank financial institutions. Okay. And then, in a previous video, we've covered the functions of the monetary board. Although not in depth, but I think it's enough that we have an overview, okay, of what they do. Okay. So that's it for this one. Again, we've covered the BSP regulations, guidelines, and other regulations. Although again, just an overview, not the very in-depth. Just the importance and why they have to do this thing. Okay. So that's it for this one. Thanks and bye.